All right. Hello, everyone. Thank you for joining us today for our NM Rainforest webinar. Today, we're talking about unlocking cash flow and how to leverage R&D payroll tax credits. And we'll be hearing from Patrick Gately, who's a tax incentive specialist at Layton, and he advises companies on maximizing their federal and state R&D tax credits related to innovation incentives. So really excited to hear from him. This is definitely a topic that I'm interested in and that I don't know a lot about. So excited to hear from you, Patrick, and I'll just let you take it from here.
Wonderful. Thank you, Cecilia, for first off inviting me to speak to everyone today, but then also for the wonderful introduction as well. Um, for everyone, I'm Pat Gately here at Layton. I'm a strategic development executive and manager here in our life science cluster at Layton. The wonderful boat that I have behind me is actually part of our sailing team. We work with a couple of different groups, most notably Team USA for Sail GP. For anyone that's not familiar, it's like the Formula One of sailboat racing. We're super excited to work with them, and we work with the Team France out of our global headquarters in France as well. But yeah, just super excited to be here today and help everyone get a better understanding of how these tax credits can impact your business. After the presentation, Cecilia will be sharing the slides for everyone, and a link to my article that I wrote specifically on these payroll R&D tax credits for early stage life science companies. So that's what I'll be focused on today, and very excited to be here. So thank you again. Wonderful. Without further ado, I'm going to kind of jump into it. We've already met myself. There's just another picture of me. Um, and I'm going to start here with now an introduction on Layton. So, as I mentioned, we're a global company. We have operations in 17 different countries now. We just opened our office in Greece. So, I'd love to maybe get over there sometime soon and maybe go visit Athens and the Greece office. But in the meantime, we're now also in New York City here in the US. So we have offices in Boston, San Francisco, Houston, which you see on the screen, and then New York City now as well, with a couple offices in actually Arizona planned as well. So lots of expansion here at Layton. We're looking to further grow our practice here in the U.S. Because we're one of the leaders across the globe in the R&D tax credits. It's been pretty impressive to see the growth that we've sustained since the legislation that came through last year with the OB3. So lots of opportunities for companies to go after these credits and open cash flow for their business. So, um, John, it's wonderful to see you on the screen. Before I jump any deeper, I want to guess just get a understanding of who we have in the room and the types of businesses, the work that you're developing.
Should I go first?
That works for me. You're already
Oh,
off mute.
okay. My name is John Schwitz. I'm the founder of three AI companies, which one is storytelling for grandparents to do their children, another is legal discovery, and the third is language development. I have four master's degree graduates who are doing development. They're on the East Coast right now. And I have two CNMU interns working for me. So I'm very, very interested to see if I could use R&D tax credits for my business. I don't have enough revenue to defer it right now, but that's coming in the second and third quarter.
Exactly. Okay, that makes sense. And John, those graduate students and interns that you mentioned, it sounds like those are all W-2 employees. Would that be accurate?
That's accurate.
Wonderful. Thank you.
I can go next. I'm Kara Michaelisen, Director of Economic Development at UNM Rainforest Innovations. So thank you today for your time, Patrick, and sharing your knowledge.
Thank you, Kara.
Hi, Patrick. I can go next. I'm also with UNM Rainforest Innovations. I'm the Director of Commercialization. So interested in just learning in general these incentives so that I can be informed as we work with startup companies to be able to, refer them to some of the things that are available out there for tax credit.
Wonderful. Thank you, Arlene.
Yeah, thank you.
I can go next. Sorry, my camera's off, but I'm Tina. I'm the entrepreneurship coordinator for the Technology Innovation Office. I'm just here to learn, and actually, I owe John an email, so happy to be here.
Hi, Tina.
Wonderful. Thank you, Tina. And thank you everyone for jumping in and playing along with me. I also want to preface, if you have any questions throughout the presentation, please just jump in and ask the question. I find it's much more impactful and the audience leaves with a little bit more, I guess, understanding when we have that interaction during the presentation to walk through maybe specific examples that apply to your business or different startups that you work with. So perfect. I'm gonna jump right in here with kind of the reality that's facing innovators, and the reality is the lack of capital. And most companies, right? They don't fail because of the science. They fail because they don't have enough money to continue working on their science. So the life science industry, as we know, is very capital intensive. Your burn rates are extremely high, which creates a lot of problems on the cash flow side. But then also, as you work to develop either, John, in your case, AI or medical devices or new pharmaceutical drugs, whatever it may be, there are often extended timelines to get it regulated for the industry that you're looking to work with. Right, John, I'm sure there's plenty of red tape you see on the legal discovery AI platform that you have. And that's one of the things that kind of makes the burn rate so high and the project takes so long is the regulations that you have to adhere to. Um, so that's kind of why we're here today. A big shift that most founders miss is leveraging these tax credits as a tax strategy is wonderful. And that's something that should be done with your CPA and specialist firms like our team here at Leighton. But beyond that, they're much more of a funding strategy. Convert your research spending into capital that extends your runway and reduces your dilution. On average, we see a 10% tax credit applied to the qualified research expenses. So for a little example that I have here on the slide, for about $500,000 spent, you can expect about $50,000 in tax credits. I'm going to stay really focused on the payroll version of the tax credit today. There is one that applies to the income tax, but for this audience today, being very focused in the startup community, the payroll tax credit is going to be the most impactful because it's a short period of time, only 5 years of qualified years for it, and you have to be under 5 million in gross receipts on an average annual basis for those 5 years. So it's really impactful to get in now. And one of the other things I'll talk about is the payroll tax credit can only be claimed on an original tax filing. So for businesses that are filing in March or April, coming up here in the next month or two, it's very important that we identify this ahead of time within a most likely a week or so after this to get them their estimates and get a review from their CPA to identify if it makes sense. Doing it on an original return, typically it always makes sense because it's directly offsetting the payroll taxes that you would owe in the upcoming quarters. Um, Next, what truly counts as R&D? Under the tax code, R&D is extremely broad. There's a four-part test, and life science highly qualifies. Part one of the test is it a new or improved technique, formula, or business component? And right, that could be almost anything, whether it be in breweries, when they're testing a new beer that they're trying to create, or in John's case, developing a new function for an AI platform, right? So it's extremely broad, and these are typically the five categories we see as what is research and development. So it could be a prototype, process. So prototype development, if you're building that model, you're running tests on it, you're identifying in a much more of a I guess tangible version, maybe physical materials that are going into that prototype. How are we making that prototype? Is it a 3D printer? Do we have other tools? And then John, in your case, running your algorithms, right? Doing iterative tests through, hey, here's our algorithm. We're going to pen test it, make sure that we're good to go. And that would be part of essentially a software prototype. Process engineering, if you're further developing your process of chemistry in the pharmaceutical world to make a better drug, your process of manufacturing, how you're maybe um, enhancing your scalability by retooling your machines in a much more skilled process. And then, John, I mean, everything you guys are doing in bug identification and trying to eliminate the amount of bugs that are in the code is just part of your process that you continually improve. Software and data infrastructure, I think that speaks for itself. Pretty standard and straightforward. John, this I'm guessing is what most of your R&D is focused on is new functions for your platform. Quality testing, and with quality testing, we're looking at typically the support group, like data control, quality analytics, process. What am I looking for? Um, Process support. So like your IT help desk, maybe who's getting feedback on the platform and then relaying that to the coders who are actually doing the development. Things like those groups that I had mentioned also qualify some of their time as R&D, because without that feedback or that data analytics, you wouldn't be able to know what's wrong and how to improve your platform. And then regulatory driven experimentation. This is a really long way of saying clinical trials. In most cases for the life science industry, but if there's any other tests that you see for your platform, like John, I would think you guys have to do a lot of NIST security frameworks and testing for your platform. That's one of the regulatory bodies that you need to follow. And if you have to do a test with a certain outside group to prove that to them, then that would be something that would be a regulatory driven experiment. Does that make
This
sense?
this is a really great slide because my conception of R&D before this slide was very restrictive. And I'm really happy that all my work with this slide would qualify for R&D.
Yeah. Well, I'm that's great feedback, John. I'm glad this slide made it a little bit clearer, and that's that's the goal of today is help you quickly identify, hey, you know what, hey, probably most of what I'm doing is R&D, and then we can set up time after this to further walk through your unique scenario and get you your estimate of benefits. But glad to hear the feedback and thank you for sharing that. I'll pass that along to the marketing team who kind of came up with the slide itself, and I know that we'll probably be able to work that into some more presentations in the future. So thank you for that. My next slide here is going to be really focused on how do we increase our runway, right? And essentially what we can do with the R&D tax credit is multiply our expenses to create even more. And there are some, I would say, states that do a much better job of promoting research and development than others, and offer tax credits alongside the federal version to, I guess, reinvest in the companies that they want in their business ecosystem. One of the things that I was fortunate enough to have a chance to speak with one of the state representatives while I was at the New Mexico Bio Knowledge Fair back in November, and one of the things that I had mentioned to her was a payroll tax credit on the state level to help companies hire scientists or engineers or chemists to be able to actually do their work and find the solutions that they're looking for. So we'll hopefully see more of that come through different states. Right now, most states have a wide variety of what they can try and do, but they're mainly focused on offsetting the income tax for the business. So hopefully we'll get there. But as we look at how these credits are often leveraged by different companies, they're used in a number of different ways. One of the ways is if we do a look back study, which I'll get into in a minute, claiming any income tax credits for the business can actually increase the valuation of the business. So if you're looking for capital funding or investors, the credits go on the books as an asset, which further increase the valuation of the company. So great way to improve the valuation of the business. You can reinvest this into your innovation, whether it be new tools, equipment, maybe a new employee, and then further even delay fundraising. I think the other two of extending your cash runway and reducing your dilution kind of speak for themselves, because it's about a 10% essentially deduction or rebate on all of your expenses from the government. So really nice. And what we've really seen here at Layton in the life science startup industry is when CEOs and CFOs are working with their teams to build this into their capital strategy to make sure when they go ask for that next round of funding, whether it be pre-seed, Series A, whatever it may be, they can look at their investors and say, hey, you know, we actually have this built into our capital strategy. This is something we expect year over year. I wanted to share a little case study that is further explained in my article, which will be shared after this. But the group that we had worked with is a group called Keon Research, and they were really focused on a lot of more so like clinical research work. Clients would come to them with a discovery problem. They were really focused on improving their processes and formulas to identify those discovery problems and solutions. And what they've been able to do with the funds that they've claimed from their research and development is much of the same what I had kind of mentioned previously, except they were able to hire another engineer for additional product development. They expanded their research pipelines. They were able to take on a couple of extra projects now throughout the year with this additional employee to increase their scalability and the amount of clients they were able to work with. And then they were able to commercialize these products faster because they had additional cash runway for marketing purposes. So they the ultimate result was they were preserving cash, and reinvesting it in unique ways without slowing down their innovation. Next, I wanted to walk through a couple of the advantages of the payroll tax credit. And I think the first one kind of speaks for itself. And John, this was something that you were mentioning. You don't need to be profitable. You just need to be paying payroll tax, which W-2 employees create. Whether you have one, you have 10, or you have 1,000, you have payroll tax with a W-2 employee. Point number two is obviously I just had kind of explained in section one, these are used against your payroll tax, and you can claim up to $500,000 of payroll tax credits per year. So can definitely be pretty exciting. That would mean you have to have a lot of spend, but with that high burn rate that I had mentioned previously, it's not something that's out of the question, especially in the life science space. And then lastly, and what I think is most valuable, is this creates near-term cash flow when it's needed most. What we typically see is businesses have a separate bank account set aside for their taxes that they expect to pay on a yearly basis. What the tax credits do is allow them to not go to this bank account or leverage these funds in the ways that I had mentioned previously. So yeah, just extremely impactful, extremely impactful. Now we're getting into some more of the not fun stuff, but the important stuff, right? Things that separate you as a business when claiming the research and development tax credit that increase the amount of credits you're most likely able to receive. What we typically see is if you work with a CPA firm, or your standard tax preparer, they often just don't have the expertise in your specific field, right? John, in your case, they're not software engineers, and for the rest of the life science community, they're not medical device, mechanical engineers or biochemists or anything like that. So when you start talking to them in a technical way about what you're doing from a development standpoint, it often goes over their head and they forget about the supporting roles as well as the supervision roles overseeing the research and development, and then a lot of the materials and supplies and excess costs from your software development tools. So documenting the evidence of experimentation, your identification of your technical uncertainty, which is again part of the 4-part test, really allows your claim and our technical documentation for your claim to be easily defensible if there was ever an audit. It's not something that we typically see, especially because it's very incentivized and the onus is on the taxpayer to do this, which is why when you typically work with a CPA, importantly, track the qualified wages and personnel along with the expenses, whether that be software or materials. This is a fun sentence, and I felt like I had to put it on here that one of our technical consulting leads always says, strong documentation is not admin, it's risk management. So I'll leave that here as a little bit of food for thought. But to me, what it means is if you have the proper documentation, you're being risk adverse because you're identifying anything that could go wrong up front, and you've shown your work to be able to defend it quite easily. Next, I want to talk about, on the topic of risk, what's hidden, right? What's really hidden within the complexity of the study, and that's the control groups, especially in pharmaceutical clinical trials, gross receipts thresholds, uh, things as simple as bank interest can break a gross receipt threshold. Um, if you get $1 worth of interest, that could push you over the 5 million in gross receipts mark and make you not qualified. So we're really good at identifying where all these gross receipts coming from, where the expenses coming from, the structure of the entities, and then making sure that the documentation is audit defensible and ready. So it's the complexity. I think I kind of briefly touched on it previously, but it's again in the technical nature of the projects. What are you truly working on? What are we looking at from the 4-part test of what's the business component? Where's the hard science application, whether that be software or biochemistry, or a number of the other things I think I already mentioned. And then tests 3 and 4, really identifying, okay, where is our technical uncertainty? What are we trying to solve? And then how are we doing that? What's essentially our process of experimentation? How are we coming to our desired result? Whether we're successful or not is, I would say, rather irrelevant to the credit, because you're still expending resources to do that testing. But that's really the complex nature of the credit, is making sure that that is documented appropriately, and then accurately supported through your claim. I'm going to pause there because next I'm going to get into some of the financial aspects of the incentive, such as the look back, and what that looks like. Anyone have any questions on the complexity, documentation, what they should be documenting, or anything like that? Okay, perfect. So the largest opportunity that we typically see for clients, and this comes back to the valuation point that I made earlier, is the look back. These are often overlooked because in most cases, startups don't have income tax to offset with these credits, but as I previously mentioned, they can increase the valuation of the business. So if you're looking for capital, it can really be a nice boost to whatever the valuation of the business is. Because when we use the look back, we can look back 3 years, and that's 3 years of your development work. If you've already been around for a couple of years, that you can get money back on, and those are expenses that I would say most people already look at as sunk costs. We've already spent that money, we can't get it back, and there's actually an opportunity to through the research and development tax credit. The income tax credits, what's really nice, as well as the payroll tax credits, but they have a carry forward for up to 20 years. So if you expect to be profitable in the next 6 months, year, or 2 years, could be pretty valuable to know, hey, any money I might have already started to save for taxes that I'm expecting from profitability, I don't have to worry about, because I'm expecting R&D tax credits coming back. These look back credits, if you have paid income tax, come back as a cash refund check from the government. So it's a pretty big portion of expenses that comes back as a straight cash to the business. And it really, I feel like I just keep repeating myself at this point, but it really is a huge benefit to businesses that might be a little bit strapped for cash. Or in the life science space, something we've seen a lot recently, businesses that were expecting NIH funding and then suddenly had it cut, and now they're looking for different sources of capital. So next, we're gonna kind of reframe the mindset here about the credit, right? It's more than just a compliance checkbox. It's as I mentioned, funding strategy for the business. It supports multi-year innovation strategies where you don't know the overall end budget of the business. You can kind of have that flexibility to maybe stretch your means a little bit in one year with knowing credits are going to be coming back to the business. So when we think about the credit, we think of it in a holistic picture of what have we done previously that we can recapture some of our expenses on? What are we doing currently that we can claim credits on to offset our taxes for the current tax year? And then where do we expect our innovation to go from here? Could we hire more people? If we hire more people that are focused on R&D, that increases our qualified wages. We expect even more credits coming back to us in future years as we look to scale our employees, our commercialization, buy new capital equipment, whatever it may be. So I guess my question to the community of UNM Rainforest Innovations is, what will you invest in with your credits? Next, I want to kind of give an executive perspective on how companies leverage this as a competitive advantage. First off, they act early. They amend early for look back years to make sure that their refunds come in a timely manner. The current window we see for refunds right now is about 6 to 9 months. And if you amend early, you get in early, you're much more likely to be on that closer to 6 month timeline than the 9 month timeline. And then also acting early with our team on the technical scoping, starting to identify what projects that you have coming up would qualify for the incentives. So that way we can start walking you through, hey, what makes sense for us to track on a time perspective? What materials should we be looking at that we need to identify expenses for? And then also any software costs. So the technical scoping can give us a really good understanding of where our projects either in the current year are expected to get us in returns for the taxes owed this year, but then also what are we planning to do, and what technical scoping can we get ahead of to make sure that as soon as this project's kicked off, we're ready to go and we're generating our credits. Claim comprehensively. What this really means is to look back. If you have the opportunity to leverage the look back and you can bank some of these credits for valuation and investors, it's a really nice piece of the pie that investors look for when trying to identify where they're going to get the biggest bang for their buck as well. Documentation habits comes back to kind of acting early with the technical scoping, but having good time tracking systems in place, building out project and activity lists with decent descriptions, right? We don't have to have super paragraph descriptions, but at least something, couple of sentences saying, hey, here's our goal of the project and here's what we got to do to find it. Something like that will give you a good understanding. It'll provide good direction internally for the projects, but then also makes it very easy to identify the components of the project that qualify. And then lastly, integrating these credits into your capital stack, your capital planning for a year-over-year benefit. So why this matters now is that are having to halt their research projects. Capital in and of itself is not as easily received as it was around COVID and maybe a little bit during COVID. And the investor point of view, they increasingly uh, look at companies who preserve equity, demonstrate financial sophistication by building this into their picture and maximizing their non-dilutive funding sources in a very high light because they know that you're as smart as you are on the science side, you're just as savvy and just as smart on the financial side, making sure that their money will not be going to waste. And then talking about what innovations have already been done, you could already be generating value. I mentioned the look back, but this is really what we're talking about. The technical advancement that you're making, John, specifically on your software, you've already spent, I would guess, quite a good chunk of change on your development so far across your three different entities. A lot of opportunities to get some of this money back. The next question is not about eligibility. That's not even a question in really the conversation, especially in the life science and software verticals. Um, you're always doing R&D, especially in the life science space. One of the things that we see, John, I'm going to direct this specifically at you on the software side that typically doesn't qualify is improvements to the UX, UI, interface and experience side of things, the aesthetics, right? Making it look nice and something that someone wants to spend time in your console. So those types of activities on a software side typically don't qualify, but everything else we find qualifies very well. So
This is really a clean presentation. What I would make a comment on is, and this goes for the life sciences. I worked for Novartis for a number of years, and they do risk management. So
mhm.
when you talk about risk management, when when anybody does modern software development, they typically do agile development where developers meet every morning, and the CFO or the CEO meets with the lead developer once a week. And all I have to do, so I have all this documentation already on what's being developed. And what I don't have, which you brought up, is the risk management part, because all I need to do is work with my lead developer and say, here are the risks with what we're trying to do with this new software. And then I have everything perfectly documented for what you're talking about here. And that goes for a lot of uh, uh, life science development too. Um, they use risk options to understand when to shut down a project.
Yeah, no, that's a great point, John. And I think you'll get a kick out of this. This was said to me by our lead software consultant, and for the engineering team. He was mentioning all your teams, right? They do sprints for software development. Hey, we're going to do a 3 month sprint on this function or this feature or whatever it may be. How we like to position it to our software clients is we're going to do a 6 week sprint for your credits. And
Yeah.
so, yeah, it at the end of the day, the companies that we find um, that benefit fastest and are able to actively build this into their financial strategy are ones that are quick to get us documentation. And John, in your case, it sounds like you have most of it. So That's really for our team. And then just getting the financial documents to identify the expenses that are associated with the projects as well. So the documentation is really the thing that slows down or what I've seen even kill studies. If clients are good on that, our team is extremely responsive. They love even a quick 15-minute phone call just to clarify questions. And we really try and take a human first approach to make sure that all of the business components, right? For your team, it's your financial team and your operations team when we're looking at the credits. They have everything that they need to quickly leverage this or build it into their process if it's not already part of it for a year-over-year benefit. So, and then number 3 here on this slide is uh, the question is whether you're capturing your full value of your incentives or not. I kind of went through some of the things we often see missed from accountants or one of the things we've seen a lot is payroll companies getting into the R&D tax credit. Companies like maybe an ADP or Gusto or any of them, they really just kind of look at your W-2s and throw out a general estimate of time that's pretty conservative, so they don't. So you don't have to deal with an audit, and then you don't have to go back to them with any questions. Where ours is much more in depth to further support our claims, and our goal at the end of the day is to be an asset to your business, your financial team, and make this a real easy process for you.
Patrick, I happen to use Gusto for my payroll, and they're already trying to sell the R&D tax credits. So these companies are forward on that, and also health insurance.
Yeah, yeah. It for them, right? That's I'm going to be quite frank here for a moment. For them, that's not where they're generating most of their revenue. It's an a la carte service where they can show on their books for their investors, hey, look at what we're doing. We're improving. We're still generating revenue from new product streams and sources. They're first and foremost going to be a payroll company. They're going to do unbelievable calculations with your payroll, but they're not going to provide any of the consulting to make sure that your projects are accurate. You have the technical documentation and all of the materials and supplies and supervision and support groups are capitalized. So, John, I appreciate you sharing about Gusto. Uh, we've gone head to head with them a couple of times. We love doing it. We just love showing our work, to be honest with you, at the end of the day. And that kind of gets right into where I was going next with our R&D credit readiness assessment. So we'll sit down with your team in a focus session to help your leadership team identify the qualifying activities, estimate your potential benefit, evaluate your prior year opportunities, and outline a strategic path forward. And so what this looks like when you work with Leighton is you get a technical consultant that speaks your language. So John, in your case, you'd most likely have our software lead, Andrew, who mentioned the sprints for credits to me yesterday. And then you for anyone in the life science, they'd be working with our biochemists team and medical device manufacturing team to walk through their projects. Many of our team is, John, like yourself, worked in a number of big firms. Our technical consulting lead, she spent few years at Merck Pharmaceuticals working with their team in their antibody drug development. So lots of unique opportunities to really dive into what you're doing. And the best part about our work is, and one of the things that New Mexico Bio, UNM Rainforest Innovations really liked about our process and why they asked me to come speak is we don't charge anything up front. We provide all your estimated benefits and your initial review totally free of charge and identify with you what makes the most sense forward, right? If we look at box number 3, evaluating the prior year opportunities, if we're going to do a look back study and maybe the business only had one employee and the credits would maybe only be $1,000 or $2,000 for one of the years, it may not make sense to go back after those. So we can cut that off and we can tailor it to what makes the most sense for the business. And then this is my QR code to my LinkedIn. This is my calendar link to my calendar. If anyone has wants to walk through anything with me on their specific business, as these slides will be circulated, you have my information to get in contact with me. I'd love to walk through anything with anybody about what their business is doing in the research and development space. And I'll stop here, open up the floor to any questions or comments and feedback.
Patrick, I really like your slides. They're right to the point, and I'm also the CFO, so I can focus on what to do, with these slides, and uh, and I'm glad that I shared the thing about Gusto, which happens to be a good payroll company. There's a lot of good stuff for startups right now.
Yeah,
Uh, and my chart of accounts is zero, so I have really good records. And what I saw from your presentation is if I add some risk management with my weekly meetings, I don't think that they could challenge the R&D that I'm doing.
exactly. Exactly. John, I think that's a great point, right? Is you don't want anyone to ask any questions. And so let's go do it right the first time. To your point, many of our clients use Gusto as a payroll provider, and they do unbelievable work for their payroll clients. And that's we shout their name from the rooftop when someone's saying, "Hey, I'm looking for a new payroll solution." Typically, one of the first things that comes out of our mouth is, "Have you looked at Gusto?" Because most of the time they're looking at the Paycoms, the ADPs, the big names that you see the Super Bowl commercials of, not the newer technology that you mentioned, John, that's coming out really, really good for startups.
So I would just say this as a startup, if there's other startup people here, you can't go wrong with doing row banking, zero chart of accounts and financing, and Gusto payroll. It's all integrated, and it's a lot of it is free for the first 3 months. So it's a pretty unbelievable deal.
Wonderful.
Patrick, I had a quick question. You may have covered this, but do some of these tax incentives, are they determinant on the type of business structure you have, like LLC versus corporations or nonprofit?
That's a great question. Short answer is no. All businesses can leverage these credits. With businesses like LLCs or S corps, those are pass-through entities. So the owner will submit the business revenue and expenses on their personal returns, and the credits flow back to their personal returns as well.
Gotcha. Okay, great. Thank you.
You're welcome. Wonderful. If there's no other questions, I will pass it back over to Cecilia to wrap us up. And thank you again, everyone, for your time. And Cecilia and the UNM team, thank you so much for the invitation to speak.